Hi everyone and welcome to my morning report chart analysis videos on Tuesday 17th of July with me, Richard Berry, market analyst at Hantec Markets. We've got a fairly sort of mixed open today, nothing too decisive in terms of market direction. What we've had is this continued yield curve flattening, and that is going to be, I think, a feature potentially of this testimony for Jerome Powell today. In front of this testimony, the dollar's just slipped in the last couple of days again. It does seem as though that the strength of the dollar bull run has just sort of become increasingly uncertain in the last few weeks, and that is sort of a feature of the fact that I think that what we've now got is Treasury yields basically going sideways, not really doing anything. And it's interesting that what we have got today is a slight continuation of this mild dollar correction, although the yen weakness does continue. What you have down here is the New Zealand dollar, which is gaining quite significantly after an RBNZ model suggested that inflation was picking up. So that is driven the Kiwi outperformance, but gold is mildly higher amid that dollar corrective move. And what we've got is equity markets basically just jumping around, nothing too significant in terms of direction. Wall Street last night was mildly lower, but to be honest, it's sort of fairly much consolidating around these sort of levels it's been for the last sort of few days, really. So yeah, we come into today with the focus on the UK earnings, or average weekly earnings, I should say, and that comes out in a minute actually, and it's expected to just drop slightly to 2.7%. Unemployment to stay at 4.2%. Industrial production for the US as well, expected to be 0.6% higher on the month, and capacity utilization continues to improve, 78.3. So that's the data points for today. But yeah, this congressional testimony for Jerome Powell this afternoon, I think is going to be key because it's his first testimony, but it also comes amid the backdrop of this continued yield curve flattening in the States, and how the Fed assesses that, and whether he starts to think whether it's an issue that they need to sort of concentrate on will be important. So that could have an impact on the dollar as the day goes on. So let's look at my chart of the day, which is dollar Swiss. Now this sort of takes account of the dollar weakness that we've had in the last, or the corrective move on the dollar in the last few days. Now this candlestick setup, where you have one strong solid bull candle, you have a shooting star, and then a solid bear candle. Now that is effectively, although not to the pip, but it is effectively an evening star candlestick setup, which is a bearish configuration. It's basically bullish and then turns around and then continues to turn around and moves negatively, and that negative candle that we've got today sort of reflects that as well. And what you have on the momentum indicators is this sort of ranging look to the sort of RSI, the MACD, and the stochastics on the last sort of month or so, but turning lower on the stochastics, turning lower on the RSI. It just all sort of suggests we're coming back towards a test of this key sort of 98.50 area, which ultimately is also this 23.6% fib level that has been tested on a couple of times and held, I might add, but still could well be coming under a bit of pressure. Now we've already, I've got this dotted blue line here, already broken this uptrend, so we're sort of back towards that uptrend now and sort of seemingly set to move to the downside again. So it seems as though corrective pressure on the dollar Swissy is increasing now. You've got the configuration on the hourly chart where the market has rolled over, has moved below all the moving averages. Momentum indicators configuration is sort of turning corrective as well. You're back below this 99.65 pivot today, so that sort of at least opens probably 99 figure area, which is the sort of support from early last week, but 98, this reaction low around 98.50, 98.60, that seems to be as though that's where the market is coming back to now. There's a little bit of a pivot around sort of parity area, but it certainly seems as though lower highs, lower lows is beginning to form, and yeah, I think we could see a bit more of a correction on dollar Swissy now. So with that in mind, I wish you good luck in your trading, and I'll speak to you later.